Rob, welcome to the podcast. I have a lot to chat with you about. I'm super excited for this.
I'm excited to be here as well. Just shut down the work for the day. So excited to chat with you.
Not in that same headspace. That's the fun thing about these intercontinental podcasts, if you will, these cross-Atlantic, transatlantic podcasts.
So I'm in London now and I still work mostly with US partners, and it's nice because I've got a few hours in the morning to just kind of get stuff done before, customer support requests and stuff start coming in. So been nice being over here. Good to be
Amazing.
ahead.
Yeah, that is true. We'll get to Churnkey. I want to ask you about like your first proper entrepreneurial SaaS startup that you started. Like, what was that idea and where were you in life when you launched it?
Yeah. It's interesting. When I was just wrapping up with university and I was applying to a bunch of jobs at big tech companies, your FANG type companies, and was lucky enough to get some offers there, but it was something that I just couldn't really see myself doing, at least not immediately. I wanted to try things out for myself. And my first delve into working for myself was on Fiverr. And I was a developer, so I had only been coding for 3 years. I know a lot of coders start, very young, but I didn't start until about halfway through college. And I kind of niched down into data visualization, which ended up being very important for me, finding that niche. And I would sell gigs on Fiverr. So literally $5 for an hour of data viz development work, like way underpriced, but just getting that, that first income that I made for myself was a completely different experience. And one thing led to another. I started doing bigger contract work for some people I found through Upwork, one of the companies I ended up working for many years and became on actually as co-owner of that company. But that's a little bit of a different story with Wave. But I would say, first off, going out on my own versus an employee route was very important for me to have a niche in data visualization work. It's something there where, you cut down on the competition, you cut down on all of these asks for development work or whatever work. They always have so many different applicants, and just a way to separate yourself from everyone else. So I would go out and I would do a ton of work for $5, and just eventually the reviews started coming in. Word of mouth referrals was very important for me early on.
Can we add some quantification to the timeline between graduating college, selling hourly work? Unless you're working like more hours than there are in a week, it's difficult for me to believe that you're able to support yourself with 5-hour gigs for very long. Like, what was the amount of time elapsed between like 5 hours, $5 per hour for like gig work, and okay, I'm actually now kind of confident I can support myself as a freelancer?
Yeah. So I spent about the summer, maybe a little bit more. So like 4 months doing gig work, and for me, it moved up very quickly, which was fortunate. And it went from $5, and then I was charging probably $35 within 2 months per hour. And still as a contractor, you don't have these contracts lined up. You spend a lot of time finding them. $35 an hour is still probably not enough to pay the bills. So it was at that time where some of the people that I worked with were asking about full-time work or close to full-time work. So I ended up working closer to a full-time gig with one of those companies, and that was called Wave, which was a podcast marketing tool. And at the same time I was doing part-time work there, I still had some student debt to repay. So I did end up taking a full-time job alongside the contract work. So I went out to Seattle. I was working at a data visualization startup. And then nights and weekends, I was working on Wave. So these are the people that hired me as a contractor. And I think for me, from the mindset there of a couple months prior, just not wanting to go into this full-time employee mode, having this other project to work on nights and weekends, and having it very, very practical and very much in the sense like, this is what I'm doing, and coming on as a contractor there instead of like the main founder was really important for me, I think. Because a lot of times you get into this situation where, you want to be building towards something bigger. And at the end of the day or on the weekends when you actually have time, and even if you have energy on those days, if you don't have something very specific to put that energy into, it can be difficult. So for me, having somebody else do all of that founder type thinking in the beginning, and just as a contractor coming on more like, okay, this is your task-based thing that you're trying to tackle. And having that as a nights and weekends thing was much more practical for me than going going right into starting a company from scratch on nights and weekends. And it also, that company was size of 3. So it's not like it was contract work in the sense of I'm just like checking things off. It was this nice balance of doing task-based work, but also being part of the team in the sense of, decision-making and going through that process.
Yeah, we have someone very much in that exact capacity on our team right now who has a full-time software engineering job and does a lot of contract work for us, but is also very much part of the team in terms of like on stand-ups, on overall strategy, overall product discussion, contributing to aspects that are not in his lane at all in terms of, in a good way, right? In terms of like contributing to the whole of it, the whole vision. It's a cool hybrid stage that works for people depending on where they are in life and where the company is too in terms of maturity, because also like 3-person headcount.
Yeah, for sure. And for me, with this small company, me and 2 other guys, it really gave me confidence in what is possible with a small team. And it showed me what you can do. So Wave, just to talk a little bit about that, is a podcast marketing tool. You may have seen, they're called audiograms. Basically, it takes your audio and it creates a little animated waveform, turning your audio into a video so that you can share it on, Instagram, Twitter, Facebook, wherever else. And to me, the most intriguing part of that was it's fundamentally a simple product, right? We built something that was of concrete value and we productized it and we were able to sell it. But it's not like we were reinventing Google or Amazon or anything else, right? It was very much, okay, we've created this software business and we've done a good job marketing. Marketing was very important for that tool, but it just seeing that a very specific but focused value proposition can really pay dividends. And we ended up growing that product to about $130,000 in revenue per month. And for me to see that, it just gave me and the other 2 guys a lot of confidence going forward that yes, we can do this and we can really better ourselves moving forward.
And what was the size of the team when you started having those $100,000 months?
So there was 3 of us, 3 co-owners, and then we would hire out contract workers sometimes for some extra developer hands or for customer support, for marketing help and content generation.
That makes sense. Yeah, this is something we were talking about briefly before we got started. But one of the things I most personally benefit from this podcast that's really been internalized for me and like a lesson I want to be translated to other people is just like software businesses, startups in general are not just like the next Google, the next XYZ. It's just like so small and specific, like podcasts into clips, an audio format with a nice visualization. That's $1 million career business with only 6 people. And that's a lot of money to go around with 6 people. And
yeah, it absolutely is. And it's funny you mentioned that exact thing because where you can, develop something very small of value. I was actually so bullish about this idea of, okay, I want to empower other indie developers and other indie entrepreneurs to develop their own small microservices, these micro companies. And from there, I started another company, and this company doesn't have a happy ending, but I think it's a great learning lesson for me and kind of about the assumptions I made. But this company was called Flume, Floom. And the entire idea behind this was that I want to make it really easy for developers to productize and monetize whatever they're building. So like if you go out there and you create a little app, one of the most successful ones, for instance, on Flume was something that turned a tweet into a little video that looked like somebody was typing out the tweet. So you would input the tweet URL and it would give you back a video that you could share on Instagram.
I love this niche of
commonly.
Content repurposing. There's just infinite content repurposing micro SaaS ideas out there.
Right, there really are. And so the idea here would be, okay, there's a ton of developers out there. And what's frustrating about anyone, not just developers, but anyone starting a business, the frustrating thing is that we all want it to be this build it and they will come solution where we can build something amazing and people just come in and start paying for it. And it's so much not the case. It's so much of marketing and branding, and it takes time, which is frustrating, but it's the reality of the situation. So what Flume did and what it was aspired to do was create a marketplace for these very small products where people could come and find other small products. So it would take out the marketing aspect for you because it would have some searchability. And it also handled all of the billing and subscription management. So you would just, put in your bank account and you wouldn't have to deal with Stripe or setting up subscriptions or anything. And I founded this as it was a solo founder project and it was a marketplace. And these two things don't really go together. It was something where, I was trying to get other developers to list their services on there. And then I was also trying to find buyers at the same time. And it was not funded. And doing a marketplace as a solo founder, not funded, it was never destined to work out. I think it was too big of a chunk to bite out at that time. And it's an idea I'm still intrigued by, right? Like I still think there are ways that we need to empower people to more easily start businesses and lower that threshold of energy and money that you need to start a business. I still think there are solutions that are going to be out there, but at the time it was not something that I was able to, bootstrap and build up.
I've been really enjoying a lot of different people I've been learning from in terms of like different paths to like kind of stair-step style solopreneurship, just like accumulating different small pieces of it at a time, like different skills that you like add to it. There's someone we had on the podcast recently. His name's Alex. He has a no-code SaaS called Closify, which is effectively, I don't know if you're familiar with it, but it's a marketplace, funny enough, but he's not a solo founder. He already had distribution for it when he started, which helps a lot of the cold start problem with a marketplace if you have distribution. But it is a matchmaking app for closers, basically just commission-only sales reps and companies that need commission-only sales reps. And so, right, two sides, the talents and the companies. And the whole thing's just built no code, super low budget in terms of at least the MVP. And, made like several millions of dollars a year in revenue from this like no code app. And he basically has a community now where he's teaching people like no code startup. Because again, I think what we're going to discover and what we've been talking about in this conversation a lot is like, what's more important is, did you come up with a thing that solves a problem and delivers like a unique solution? So it's not like his like software company was so amazing. It was just like, he made it easier for companies to find talent and for talent to find jobs in this nation. Like software was the mechanism for it. Again, it's like the same thing about this might be like the hard thing, especially for technical people to hear, right? It's like the technical work that I imagine that you had a big role in terms of like, how do I turn audio into a cool graphic, right? In terms of data, like that's not the outcome that people care about. You made it easier for me to get more eyeballs on my podcast. And like you solved the problem in that respect.
Yeah, exactly. Yeah, that's 100% spot on. I think like for me, I'm a developer, right? But for me, the fascinating part about coding is not the coding. I've never loved coding. Growing up, I love math. I love math for the sake of math, but I picked up computer science and program because of the things that you can build with it. And that's what fascinates me. Like it's very much outcome driven. It's awesome that I can sit at my kitchen table and type on a laptop and produce something of value that everyone around the world can use. And that line of code can be run, millions or billions of times. That's awesome. But like the actual coding itself has always felt like a means to an end. And what you can build, even with no code tools or limited coding, is, I think it's important not to limit yourself. And I think knowing how things work, right? Like there's a lot of things that are adjacent to coding, but you just need to know how they work. You don't necessarily need to know the coding. Like if you can go into Stripe and get that set up and just have an appetite for learning some of these things that seem like they're gonna, are blockers, but really it's just a matter of, putting your head down and learning for a couple of days and picking these things up and not being afraid of technical things as a whole, even if you're not going to get coding. But yeah, it's so much so a means to an end for me.
Yeah, well, I think about one of the most prominent indie hackers, right? Peter Levels, the guy who created Nomad List and a bunch of other little apps. Like his first really successful indie hacking app was like Nomad List, which was effectively a database of like the best places for remote workers to travel. But that app just started literally as a Google sheet. So like zero coding, just like a Google sheet that people could contribute to, and then you had to pay to get the link. Like, again, it's more about solving the problem and then just retrofitting the tool to the job. And like, I want to list off just a couple like recent podcasts just for context. Like this is just something I have so much fun doing the podcast because it just helps me internalize this lesson that just for so long I thought about the wrong way. And I think so many people still think about backwards. Like the pattern of success I find with SaaS companies on this podcast, like it's all so simple. It's like there was a guy who created a speech and debate software company for like high schoolers that just like automated research. He was just a nerd in high school and knew how to code. wrote code that automated all the research he did, sold it to every high school in the country. Or like, I don't know what year you graduated college, but like we had the founder of Courseical on this podcast, and that's like an app that he was in college, wanted to know when a seat opened up in the later class, built a scraper that looks at the class checker for his school, gets a notification when a seat opens and the thing that's a better schedule. Boom. App for every college student in the country. We had the guy just last night, actually, from Remind 101, just like same story, just like wanted to know when his homework was due, built a spreadsheet to notify him when homework was due. And now that's an app used in like every public school in the country for teachers to tell students when their due dates are due via SMS. And it like literally a billion API calls per month to Twilio to send that out. Just all of these stories to me are so exciting because it's just like, and again, how do you find these problems? The answer is like, do things, right? It's like start a podcast, take a job, be in an industry, talk to customers, just exist in the world, leave your apartments, or like if you leave your apartments either in the literal sense of like going to events and talking to people that do things in like real world situations, or leave your apartment in like the mental kind of metaverse sense and like in the academic definition, right? Like engage into the digital social world of like participating in discussions online and getting into niche subreddits and like existing in different communities and then like there's just an infinite amount of unsolved small problems when you think really small details. But I want to now figure out for you specifically what the story is for the problem that led to your current company that you're building, Churnkey. And because I think the story is that Wave was acquired. So I don't know like if you care to get into that or not, but like the Wave chapter closes and the Churnkey chapter opens. What was the like problem and how did you find it that led to this thing happening?
Yeah. So speaking of going out there and building things and seeing what comes of it, the Churnkey chapter actually started before the Wave one closed. It started as an internal tool for Wave. So it's exactly what you're mentioning there. With Wave, we had a very big churn problem. So churn being customers canceling. And our cancellation rate was anywhere between 10 and 13% of customers month over month. So, if we've got 100 customers, it's down to 90 or 87 at the end of the month. So for us we would need to bring in a lot of new customers to just combat churn. And it was interesting. We realized we had this problem. We hit a growth ceiling. We weren't growing anymore because we were losing so many customers. And we basically stopped everything else and focused on this. And we ended up like hiring out contractors, consultants. We paid them tens of thousands of dollars. We're just like, hey, tell us what to do. Like, what are the best practices? What should we be doing? The entire experience on that consultation front and kind of our own research front was a little bit frustrating. There was not a lot of good information out there about best practices. The consultative services that we paid a lot of money for didn't really move the needle. And what we ended up doing was instead just looking at, okay, what are the biggest software subscription companies in the world doing? You look at Netflix, you look at Audible, and they all have this, number one, they have an onboarding flow where they figure out why you're canceling. And number two, some of them like Audible will give you an incentive to stick around, right? Like if you try to cancel Prime or Audible, they're going to say, okay, we'll give you, another 2 weeks free, or we'll give you credit, or we'll give you half off, something there where they try to retain you instead of just letting you cancel. And not letting you cancel as in they're going to block you like Comcast or DirecTV. It's just, okay, let's use the cancellation as an opportunity to refresh this, relationship with the customer. Clearly something is not what it used to be. The customer came here and they got value out of it and they were paying you and they were happy. And then something changed. And sometimes that's on your side. Sometimes there's a technical issue. But most of the time, it's just something with the customer and it's something out of your control. And it doesn't necessarily mean that they want to leave forever. It might be there temporarily for Wave. A lot of people will start a podcast and then they will go on break for the summer. Then they want to come back. So for us, it was looking at these big companies, seeing what they're doing, and then creating a version of that in-house. So we created a personalized cancel flows based on, how long people have been subscribed, how much they've used the product. And this was the first version of Churnkey, which we called Deflector, which was an in-house cancel flow for Wave. Now, a couple months later, probably some 6 months later, we had been looking to sell Wave and ended up selling that early 2021. And since then, we basically went straight into productizing Churnkey, what is now Churnkey, and making it, the best possible version of that so that anyone that runs a subscription service, whether or not it's software, or not, we do like box delivery services as well. Basically, anyone with a subscription service, we want it to be very easy for you to have a world-class cancel flow in place very quickly. So with Churnkey, it's a B2B, business to business company versus Wave, which was B2C, business to customer, or it's more prosumer based, but it's been a whole different slew of problems compared to Wave, which has been challenging at times, but definitely very interesting. It's way different than we thought it would be. We had this playbook for growth and marketing, which worked very well for Wave, and we tried to use it for Churnkey. Just turns out, no, this is not the same thing, and you have to market it very differently. So it's been a big learning experience, and we've definitely had, within the last year, we've kind of found our footing, found a lot of traction.
No, I think it's a fascinating idea. I really, really like it quite a bit. And I love the story as well of internal tools. I think that kind of even back to like dispelling entrepreneurial narratives in terms of like problematic ones, like all of those stories I just told are kind of like cute in terms of like, oh, as a high school student in this activity, and I don't like say that to be, what's it called? Like condescending, right? I don't want to be condescending saying like those are cute, but like people listening to this are like, okay, well, I'm not in high school anymore. I'm not on some sports team. I'm not in some club, and I'm not in college. I'm not going to build like the next ed tech app for students. It's like, I think the kind of adult version of that narrative that happens all the time is the productizing internal tools. Like that is 100% transparently to anyone listening to this. Like a big part of my personal game plan is like, I have an agency right now. I'm solving problems in the data analytics space for a huge variety of businesses. And in the process of doing that, I've already started productizing internal tools, just not, I don't have enough like revenue from the agency stuff to like start trying to build a SaaS on the side. But like the plan is like reach healthy revenue in the agency side of things and then start productizing like all of the problems we've had. Like people start out in entrepreneurship, and like, I just wish I could find a problem. And like the short answer is just like join some other thing and try to do something difficult. And like you'll find no shortage of problems to solve. And so I love this story. The one mantra I've learned recently, and I'm curious like what your experience with this has been, because I kind of was expecting you to say like kind of the opposite of what you said in terms of like B2B being different. You kind of said it like almost like it's been more difficult to some extent. So I don't know if I was like hearing that correctly or not, but the difference between like B2C is like, generally speaking, your previous business to some extent was actually B2B. If you consider like a podcast, a business, right? Like, I have an LLC, it's a business. I would pay for something like Wave through the LLC, through the business bank account, but it's typically like a broke business, right? Versus like a funded software company that has subscription revenue. Like anyone who's actually measuring their subscription revenue to the point where they know their cancellation numbers is probably healthy enough to like afford something like this and tag it to revenue. There's the mantra though, just to finish the thought, is something I learned. It's a bit crude. Something I learned from this guy, Daniel Fazio on Twitter. His name is Cold Email Wizard, and he teaches as a coaching program. And the first thing he teaches us is like, stop trying to sell to poor people, which is just like a way of saying like, if your customers don't have any money, they're not going to be good customers because your business exists to make money. It's kind of like the parable is like, well, I'm going to help people write resumes to get jobs. It's like, yes, but they can't pay you because they don't have jobs. So it's like not good problem, not a good customer to solve that problem for. But with Churnkey, what's been your experience in terms of differences in B2B marketing thus far, and how have you been approaching it?
Yeah, with B2C, so with Wave, or B2 prosumer at least, it was everything seemed to scale very easily, right? Like the marketing materials, the online advertising, it's kind of just, okay, this seems to be working, let's ramp it up. And there's customers all over the place. With B2B, I think it is easier to get your first, maybe 1,000 or 5,000 or 10,000 in revenue, because there are these bigger personal relationships that you have with customers, and you can sell them a $2,000 a month contract, right? What we have found is difficult, and as a bootstrapped company, and there are 3 full-time founders working on it, is it takes a lot of time if you're going to be selling something at, $1,000 or $2,000 a month. Having the time to work with them directly, get through all of the different procurement processes, right? Each person that we talk to, are they a decision maker? Do they need to go back to somebody else? Do we need to have meetings and meetings and meetings? It's kind of been the story of the game. So it's been different, right? So what we thought would work and what we had hoped would work is that, okay, let's just create awesome content. There was a dearth of content around retention, and we created a lot of good content around it. And that gets us, instead of getting us customers on that gets us demo meetings where we need to have more meetings. So I think once you hit the part where you can start cash flowing resources, customer support, and people to field these demo calls, I think that's when it's what we've seen is really starts to ramp up. But so for me, my experience personally, and again, this is going to be different for everyone, is that the first couple thousand in revenue per month is probably easier for B2B, but then to scale that, you need to change how you're doing things in a bigger way than you need to change things with B2C. Like the first 1,000 in revenue for B2C, you can basically apply in just a bigger way for the next 1,000 to 10,000 in revenue versus B2B. It's been, okay, we need to change the story now that we're at this point, and we need to figure out how to manage these scarce resources a little bit better.
Yeah. I see like a lot of really, I'd say trendy, at least in circles I'm in. I like very familiar with, I have I showed you earlier, flip my camera on this huge screen. I got your page open over here, like Copy AI is super relevant. Hype Fury and Tweet Hunter are also super like kind of trendy SaaS startups. Exploding Topics, I'm a huge fan of them. It's really funny, honestly, because I'm very aware that like all four of those like do very well with their cancellation flows. It's like funny now in hindsight to like think about this because like I've definitely churned from Hype Fury. They've definitely recovered me a couple of times. And like, I don't know if I've actually purchased any of these other tools, but like Exploding Topics, their email marketing is just really well. It's just in a more expensive service. I can't really justify right now what I'm doing. But how did you get like these really big name early testimonials to kind of like, and do they just look nice to a person like me, or have these actually made a big difference in the sales process? Like has having these made a big noticeable attributable difference in like the B2B sales process? Like having these, at least in my opinion, like pretty well known in a lot of circles, like Riley Chase, he's the guy from Hostify, right? Mm-hmm. I've like followed him on LinkedIn forever. That's because he's just super esoteric. But if you've read MJ DeMarco's books,
I haven't.
Okay, he's like another great resource. It's called the Fastlane Forum. It's like this huge online forum, like very web 1.0 style forum that's just like actually still really active. I think those are like, this is a total sidebar, but like places with, I'm going to not use the word sauce here because I need to like not use the word sauce like it's everyday parlance, but the places with the most alpha, alpha and sauce kind of mean the same thing in my opinion. Like the most just like Facebook, for example, like there's no alpha on Facebook. Maybe in Facebook groups, like weird Facebook groups that are still active, but like any survey, like messaging platform, like subreddits, but if it's like a web 2.0, like 2006 style aesthetic design forum, like, and there's still people active on it, like that's where all the hidden gems are. Anyway, like that's how I found Riley Chase. Like he like read the book, told his whole story on there, and then I followed him on LinkedIn and like have watched him grow like very quickly in the past couple of years.
Yeah, he's killing it. Riley Chase is. It's really cool to see. I would say especially with B2B and especially with how many meetings and how many different people we need to talk to from each company, having those bigger customers and having the testimonials it's been a great impact. I think if somebody from the team is like, hey, I stumbled across Churnkey, I think we might be able to use it. What happens is they send the link to somebody else on the team. Team goes to the marketing site, and if they recognize any of those companies, it gives it immediate credibility. So we found that has been really good. So, and it's word of mouth is the other one, and it's customer support is always going to be difficult, and it's a developer product. So I'm on there a lot of times with developers, and it takes a lot of time, but it's something we want to, I think on the product side, we've got the best of market, and on the customer support side and just, working with these people long-term, it's something that we want to continue to spend the time on even as we grow. We want to give that first-class experience in terms of just working with people, and we've seen that pay off in long-term ways. So it's difficult to justify almost spending so much time on one-on-one meetings with developer teams, even for smaller companies, to just get them set up with everything. But I think long-term, it pays off in ways that are difficult to measure because there's no UTM on the word of mouth referrals. But I think it's just something you have to commit to long enough to start seeing that come back in.
What would you say is like I see so many different ways this could go. Like again, subscription box. There's just I've been thinking a lot right about B2B sales. That's been like my entire headspace for 6 months now, if not longer. And maybe you're not, I think you're the CTO, right?
Mhm.
So
Correct.
maybe you're not the person to direct all these questions to. But like, what is the plan for this year? We're recording this in pretty early 2023. You said like you kind of now have, again, these 10 really solid case studies and testimonials, and now is like the time to like start to scale. What's the plan and strategy for doing that?
Yeah. So year one was, let's nail down our initial version of the product. And with B2B, it's a little bit different because especially with a billing product, it's like, there can't be any mistakes here. A lot of times this phrase is used, all right, if you are launching something that you're not ashamed of, you waited too long. And I've never bought into that. I like having a lot of being proud of what I'm building, kind of take a craftsman approach to it. And for us, especially dealing with billing stuff, it's like, all right, we can't launch anything that's half-assed. It has to be very good. Year two was scaling horizontally in terms of, okay, we started with a Stripe integration. Now we're going to build Chargebee and Braintree. And we're also going to add a lot of product features, analytics, and add in failed payment recovery. And coming into year three, we've got some more cash flow to reinvest in the product. And what I'm most excited about is we started on one side of the customer lifecycle with cancellations. And we have awesome data there in terms of all of the billing data, subscriptions, how people are using their, how long people are staying subscribed and why they're leaving. And we want to move back up the customer lifecycle. So talk about like app specific usage data, collecting metrics on, okay, are they using this feature? Have they been active this month? How many users are doing that? And this is going to manifest itself in a couple different ways. First of all, it's going to be for predictive metrics. So forecasting MRR growth, forecasting churn prediction. And second of all, it's going to be for proactive actions regarding that. So if you want to send proactive re-engagement campaigns, if people have not been engaging with the app and they're likely to churn, how can you get them, reinvigorated in the product? How can you show them why they signed up again, basically? And third of all, what I'm most excited for is we can actually use this data to give you better insight into your own product and what features are people using that are most important for predicting how long they're going to stay subscribed. What features are, give you basically direct product or data-driven product decisions on what is valuable to all of your customers. Because it's a difficult decision a lot of times as a product manager, figuring out, what direction should we take this? There's always so many different directions you can take a product. And it's very difficult. And a lot of times you listen to a loud minority who maybe you're speaking with on technical cases and something's gone wrong. But a lot of times what you would rather do is step away from this and do it in a data-driven way, figure out what features are being used, which ones are providing the most value. So I'm really excited this year is going to be a big focus on just doubling down on the data side and allowing kind of empowering customer success teams to make data-driven decisions.
How white glove or scalable? I don't know enough about like standard quality of present day analytics for like your average SaaS company. But I'm thinking from a very practical Google Analytics tagging perspective in terms of like a brand, like if a brand doesn't have like the tagging for the different events on their website to like know like the different features and like feature specific analytics and like usage of particular buttons and submenus and like things like that, like is that kind of a prerequisite? Or do you come in and offer like a consultative, like, okay, let's get you just to the point, like you're tracking everything correctly. And then, because like, that's very difficult for like a SaaS to do. Like I'm thinking like you have to have a pretty mature business, technically speaking, to just then come in and add value there. If like, they have to have a lot set up very in a sophisticated way for like you to be able to come in and make predictive analytics out of it and make genuine recommendations in like a scalable, automated way.
Yeah, there's a couple of interesting things to dig into here. The first one is you can actually do a lot with just the billing data, which is interesting in itself. There have been models developed in the past, which will try to do, churn prediction. And there are a lot of different things within the last, 3-4 years in the machine learning world where a lot better models can be applied here. So the first step is without any additional work on the company side to tag these events and add those features in, because you're right, sometimes that does take a long time to do and you need the resources to be able to do that. So even before you do that, by default, we are tracking customer activity. So if they have logged in, which days they've logged in, that combined with billing activity. So we know when they have subscribed and when they pay their invoices, if they leave, why they leave. Those two things combined just themselves gives you a ton of knowledge. And so in particular, if anyone listening is digging into the machine learning world, you can use recurrent neural nets on this. It was actually a model commonly used for NLP, commonly used for language models. But essentially, instead of looking at, okay, this is a block of customer information and try to predict if the customer is going to churn or not, instead what you do is you look at it on a month by month by month basis. Just as you, for instance, for translation tasks, NLP translation tasks, you look at it word by word and you translate it back into a different language. For this, it's using basically the same models, the same structure of the neural net, but you're using it for, okay, was this customer active this month? Did they pay their invoice? Did they think about canceling? Okay, let's move on to the next month. And this model is shown to be, roughly 2 or 3 times more accurate than historically log regression models have been used for churn prediction. So I'm really excited to get this out we've done some beta studies on a couple of companies, and I'm really excited to get this out at scale to the rest of our customers.
I think that this is a nice sandbox for you. This is a cool sandbox for you to be able to be in, right? Just like,
for sure.
Yeah. Like I can hear that really genuinely.
It's very exciting to have this data. I've always been a data nerd from the beginning. So to have all this to play around with and to take all these developments within the world of AI and apply them very specifically to this problem that we're working on has been awesome.
Yeah. I could chat for a very long time about like all of these product things, because this is a lot of things that I think about. I want to ask some bonus questions, and we might also kind of some product questions as well, kind of like towards the end. But you had speaking of data visualization and like fun personal projects, one of like your more popular, this might've been several years ago, but you had a very cool Shark Tank data visualization that won several prizes, or maybe one prize. I don't know. It won a competition for data visualization. So there's some degree of sophistication there as well. What did you learn in terms of actionable insights? Like if you were to coach someone on Shark Tank game theory with the insights gathered from that report, what would you tell them?
The most interesting things that fell out of that were some of the investors, and I forget who was who here. I would have to pull that up, but
the
some
report
of them
is
would
still online and free for anyone who does want to check the receipts on this and find the name of the investor.
Yeah, so some of them would try to invest on value, right? So some of them would try to get like a really good deal, and they would only invest on these small investments for a large percentage of the company. So I mean, whether you view that as value investment or kind of betting early on, versus other ones would like to come in at a higher valuation for a smaller percentage of the company and invest at that stage of the company. So that was one of the more interesting things. I think Damon was very much like to get in on the very early stages. And I think it probably just goes down to what he likes to do in terms of growing businesses.
That's interesting. So the deal size based on investor. Yeah, you had a lot of really cool breakdowns there.
Thanks.
So, what else would you say is like the biggest low-hanging fruit for a subscription company to boost MRR besides just like billing flows?
Increasing pricing.
Increasing pricing?
Yeah, I would say increasing pricing. A lot of people are hesitant to do it. I guess now with the economy, especially, it's difficult to do. I think a lot of times as we develop something, we have and I say develop there, not just in the coding sense, but whatever we're selling, we have the tendency to want to sell it short and to underprice it. And I think what I've realized time and time again is that we can't sell these things that we build and we spend a lot of time on can be very valuable for other people. And we want to avoid underpricing it. I think especially as if a few people are complaining about pricing, we have a tendency to cut back on price and a lot of times do that too much so. If people I think aren't coming back at you at price at a pretty regular frequency, or, it's not something that's coming up a lot, I think increasing price is probably the best thing a lot of young entrepreneurs can do.
Like that. One thing we were talking about with this startup specifically is that it's tied to revenue. I think that's one of the easiest ways to both mentally in your own head, understand, justify to yourself why you're worth more, and then also to your customer. How's that been different in terms of like, and what's your story if you're like pitching a brand in a sales call in terms of like, this is worth this price because of this in revenue being next to the money?
Yeah, we are very close to the money in terms of we have a very deliberate focus on how much revenue we are actually adding by virtue of having this cancel flow in place or by virtue of recovering failed payments. And you see this all over just on like the dashboard, the admin dashboard. As soon as you log in, you'll see a boosted revenue metric. And we try to be very transparent about how much money we're hopefully bringing extra for you. And it does take a couple of months to build up. It's kind of like a compounding interest thing where the first month, there's 100 people that pause their account. They're not paying anything. But when they reactivate 2 months from then, after their pause is up, that's when you start to see the boosted revenue come in. So it's been a really big benefit in terms of very easily and very transparently justifying our company's investment in us in terms of paying their monthly price. What we have seen a little bit of, and I guess this is the other side of being close to the money, is if this, there's the boosted revenue, which is people sticking around from the cancel flow. There's a lot of other things that we also provide. For instance, the cancellation insights. Are there new reasons people are canceling? Are they trending? We run AI on the feedback that people give. So we try to use that to figure out what product features you can focus on. So there's a lot of other things value that you can get from Churnkey aside from just the boosted rev. So what we see occasionally is that companies will be too tied to just that one aspect of boosted revenue, very close to the money, and kind of forgo all the rest of it. But with that being said, like it's always nicer to have this aspect of very clearly, this is at least your return on investment that you're getting. And that's something that, coming from working on Wave where it wasn't clear, people would share podcast videos and it wasn't even, unless they're running A/B tests, they've got to take our word for it that these animated videos do better than just posting an image with audio behind it, right? So they've got to take our word for it on that. And I think that's what our ARPU, our average revenue per user on Wave was like $12 a month. So it just comes with the game of, I don't think that product is ever going to be able to charge more than $10 or $15 a month tops, because it is so much so like a tool in the sense that you use it and then you mark it, and then hopefully people come in and listen to your podcast. And then even then, you don't really see the money unless you're getting advertisement from increased listens. So very much it's a leap of faith, and hopefully you can justify that or provide. I think it's important to, as much as possible, do the research for customers. Like we did a ton of tests on, okay, how did these videos do on Facebook and on Instagram and on Twitter compared to just posting the audio? So we did a lot of research, and I think the more of that you can do, the better, because it basically starts chewing into these different leaps of faith that the customer needs to make.
Is there anything specifically that you learned about podcast marketing that in another lifetime with more hours in the day and you felt like hosting a podcast, you're like, I saw a lot of successful podcast hosts and a lot of unsuccessful podcast hosts as the data person behind the scenes of this company. Any big learnings from that?
Yeah, the biggest thing we saw at Wave, and this was part of our churn problem, was this thing. And podcasting even has a phrase for it, pod fading, which is just people start a podcast and then they give up on it. And it's something you probably know better than most. It's just, it takes a lot of work to do a podcast. Like people are just like, oh, let me just hop on Anchor FM and record this thing. That's not even the start, right? Like if you want to put together a quality podcast, it takes time and it takes commitment. And I think that's something you've got to internalize going into it. It can be fun, right? Like I'm sure you both have fun doing it. But if you want to do it for the long haul and you want to do it for getting out to a lot of listeners, it's not just a 1 week thing. It's a multi-year commitment to spending a lot of time on this. And it's something I think people are probably now starting to realize, but especially 3 years ago, like start of pandemic, it was just everyone was hopping on and starting a podcast. And I think it was just an eye-opening experience for a lot of people, how much work actually goes into it.
Definitely. Yeah. By the time this episode is published, I'm fairly confident that it'll be more than 3 years after the first one was published for us. Just
that's awesome.
Chronologically speaking, trying to think if I have final question for you here. One more fun data insight question. I think listeners will like. You did freelance work for the NBA and data analytics as well. That's very nice and sounds cool. Was it actually cool to do analytics work? And did you find out like what was that project and what did you use data to learn or discover or help a team improve? Or maybe it was the league directly or something.
Yeah, a little background on this. My friend and I, about a year or two ago, we both love basketball. We love football and stats. And we started this project, per36.com. And the idea here is just being, all right, let's get sports, they're on Twitter and stuff. There's a ton of just these hot takes. It's like, all right, let's take a step back, get away from the hot takes and do very much data-driven sports journalism. And this has just been an outlet for us to put together some really cool visuals and really cool analytics on specifically NBA and NFL data. And from that, within the first 6 months of doing that and working on it as a side project, we both had really cool offers coming in terms of working with teams or outside consultants. So both Shri and I ended up working briefly for Ben Falk, who runs an NBA analytics site called Cleaning the Glass. And Shri is still working there now. Ben's an awesome guy. And they are doing sports analytics for teams. So they build a platform of basketball analytics, which they sell to individual teams. And that's been awesome. So it was one of these stories where, and I think it's something you talk about a lot, where if you just start building something and stick with it for a while and put out quality stuff, like people will come. So this was something, even if, because we've never monetized Per36, it's a hobby project. It's something we love doing. But what we've seen from it is just a lot of really cool people who have come by and viewed it, and we've gotten in touch with and talked with. This past year, I ended up working with the NBA directly, working with their stats and analysis team and doing some data visualization work for them, specifically with defensive tracking data. So they've got all this data. You oftentimes see shot charts for offensive players, and they've got this cool tracking data where, 24 frames per second, they've got every player, the coordinates of them, and you can use that to figure out who's guarding who, how far away people are, and even do things like, all right, is this a pick and roll play versus pick and pop? And so what I worked on there a lot was basically creating defensive dashboards for, okay, what are these matchups? Who are they matched up against? And who are the best defenders? Where are they good at defending? Are they good at getting in the passing lane? A lot of things focused on that from tracking data.
That is fascinating. Where can people specifically learn about Churnkey if they're interested in this? Who, in terms of like metrics, is a good fit to like actually like a qualified customer in terms of like genuinely being interested? I don't know if there's like a minimum like monthly revenue where it's like worth their time, like a, statistically significant number of customers or amount of monthly revenue. Like this is worth the effort. Like, so like, your pitch, like if you're a SaaS company doing at least $10,000 a month, blah, 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 Churnkey, I don't know.
Yeah. We work with companies of all sizes. We work with people with 10 customers and we work with people with hundreds of thousands of customers. And it's something where it doesn't take long to set up. It's, we take care of all the billing logic for you, the discounts, the pauses, the cancellations. So, one of my favorite things actually is getting on the phone with these people who are working on early stage startups and talking to them about it and just having a conversation about it and getting them set up with Churnkey, even if it's not, boosting a crazy amount of revenue because they have low cancellation volume. It's a step where they can put that in there and make sure they're getting feedback from every customer as they cancel. It's very difficult once somebody cancels to send out an email and to get them to respond about why they canceled. So doing that proactively is great. And it's as you scale, every customer is so valuable as you're scaling. And it's really important I want everyone to be able to focus on the product they're building and not have to worry about all this retention stuff. That's why we've built it. So genuinely happy to hop on a call with anyone selling subscription.
Amazing. This has been a blast. I'm very bullish on Churnkey. I see it. I get it. It's exciting. So thank you for going on the show and great chatting today.
Thanks so much for having me.